What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. And today we have a $50,000 Bitcoin price. So in today's video, we'll be taking a look over here at the Bitcoin price chart, and we'll probably peek around at the rest of the market. We have a lot going on, and really in this video, I actually want to just kind of present the case on why I still think that Bitcoin is going to set a new all-time high. So I'm going to be focused really on that. Of course, that if you follow this channel, that translates into a lot of other things. It makes me believe that the altcoin market's going to break up higher, and that we're going to see a lot of excitement throughout the cryptocurrency market. But it's always been in my belief system that Bitcoin plays a very big role in the cryptocurrency market. So in today's video, I'm just going to break things down because I realize that I reference back to a lot of reasons why I think so. But for new people to the channel or anybody in the last couple months, maybe you haven't seen the exact breakdown. And I think really everybody can use a reminder at the same time on why I do believe that Bitcoin is going to set a new all-time high, albeit though that it won't be a huge all-time high. So I do have some of the lowest price targets for Bitcoin in regards to a new all-time high than there are out there. I know that a lot of the models out there and a lot of the predictions out there call for $100,000 Bitcoin, $300,000 Bitcoin, and my targets don't get us out there. But I'm going to present the case on why I still think it's going to go to new highs. I think it's important because, well, there's a lot of bears out there. Bears are entitled to have their own opinion. It doesn't mean that they're wrong. The market will prove all of us right or wrong. But as we get to $50,000, a lot of excitement shows up in the market. Are we going to pull back? Are we going to break out and go in a straight line up from here? That's for the market to decide. But I will present my case on why I do believe that the market still has further up to go for Bitcoin. And just know that for me personally, most of my investments are not in Bitcoin. I do own some Bitcoin, but I have already sold 65% of what I bought throughout the bear market, sold it between 45 and 58,000. So I'm not holding on to Bitcoin as a big investment for myself because the percentages aren't really there for me. I look at this as more of a bullish thing for the whole market. Let's go ahead and dive into why I believe Bitcoin will set a new all-time high. If you've been following this channel, no doubt you've seen me do this. You've seen me use the inverse price chart of the Bitcoin price. So I essentially have Bitcoin's price chart flipped upside down, and this is over the course of the last 3 to 4 years. So here's the top of the 2017 bull run. And since we're upside down, you see the big bear market where Bitcoin pulled all the way back down to 3,000. You see that over here on the side of the screen. And then you can see how we rose back up, and then we broke out all the way into the new all-time highs over here at $65,000 with our big major pullback. Now, one of the things I keep pointing to is this whole silly little structure that I have over here that's happening with Bitcoin. I always say it's 1, 2, 3, 4, and then we do 5 waves down into wave 5, and then roll 6 back up to wave 4 within wave 5. And well, in all examples that I have of this, we go on and we set one new low. And in this circumstance, for this chart here for Bitcoin, that would indicate that the price will go up and that we'd have one new high set for Bitcoin based on this structure. Now, if you've never seen this before, you're probably thinking, okay, this is just some silly thing that the blockchain backer has come up with. But the reality is we've seen this many times before. We saw this exact same structure happen with the XRP price chart back in the SEC sell-off, in which we have 1, 2, 3, 4. Then as we break below, we have 1, 2, 3, 4, 5 for our fifth wave. And then as we roll back up for number 6, where do we go? Right back into wave 4 within wave 5. Afterwards, the price does go on to set our last wave, which is number 7, taking out the bottom of wave 5. This is a normal structure. 1, 2, 3, 4, then 5 waves rolling back up to wave 4 within wave 5 to go on to set the last one. If you think I'm kind of silly right now, I would probably think the same thing if I was watching this channel for the first time and saying, okay, this guy's just kind of coming up with this as he's rolling with the punches, because while it looks good for this inverse chart thing that he's talking about. But I'm not making it up as I go. You can actually see this video from 8 months ago that I posted. Signs the bottom is in for the Ripple XRP price chart. And this video was posted on January 5th of earlier this year. So you could see me discussing this exact same phenomenon. 1, 2, 3, 4, 1, 2, 3, 4, 5 rolls back up to wave 4 circled right here within wave 5 to create the sixth wave. And then we go on and set our last one. So 1, 2, 3, 4, 1, 2, 3, 4, 5 rolls back up to wave 4 and then off we go, which is what I keep pointing to over here on the inverse price chart of Bitcoin. 1, 2, 3, 4, 1, 2, 3, 4, 5 rolls back up to wave 4 within wave 5 and then looking for that final wave. Even when we look at Bitcoin versus silver and Bitcoin versus gold, we see the exact same thing. We see the same breakdown with the 5 waves, and then the fourth wave is where the price rolled back up to even versus silver, even versus gold. And that there seems to be this breakdown that is happening right in here for Bitcoin versus silver, or silver versus Bitcoin. Bitcoin's outperforming silver, Bitcoin's outperforming gold. And you can see the breakdown occurring as it's heading in for that final wave. And so this is essentially what we're watching right here is we're watching silver and gold crash versus Bitcoin. So if silver and gold were measured in Bitcoins rather than being measured in dollars, you would be seeing silver and gold crashing right now. However, they'd be coming up to the ending of their crashing structures, in which it goes on to set this last little wave. Another thing I would like to point to here is on Bitcoin. We can see where this most recent bottom of Bitcoin came in, right? It was over here on July 20th. These are the videos I was posting leading up to that day. And I invite you to go check out these videos. And we were talking about it. So this is right here going to be on the 18th, the 19th, the 20th, and boom, finally we get green market. But in these videos, I challenge you to go watch these and take a look at them and the ones leading up to this at this point, because we were looking at something very similar to what we're talking about right in here. There were 2 coins in particular that were showing us this exact same phenomenon. 1, 2, 3, 4, 1, 2, 3, 4, 5, rolling back up for wave 6 to hit wave 4 within wave 5, and then goes on to set its final low. This was over here on Dogecoin. We were also witnessing the same thing over here on Ethereum Classic. 1, 2, 3, 4, 1, 2, 3, 4, 5 for wave 5, wave 6 goes to wave 4 within wave 5 to go on to create wave 7. And that as we were approaching this moment, we were sitting there saying, look, this is it. That's the moment. That shows that it's done. And then, like clockwork, Elon Musk, Cathie Wood, Jack Dorsey have their meeting, right? And then the prices reverse at that time after that structure completed. So we see this structure all over the place, and I've been referencing to it on this channel for a long time, and I really deep dived into it and put that big explainer video on it there for XRP back when it was having the SEC sell off, and back there on January 5th, really explaining the phenomenon of this actual crashing structure. And so as we've seen it going on here over here on the inverse price chart of Bitcoin, watching us roll back up to wave 4 within wave 5 to create wave 6, it's been my expectation that wave 7's got to come in here. And the fact is, we see it occurring here against gold and against silver at the same places right there. Wave 6 is coming up and hitting wave 4 within wave 5 on both of these. And we can see this breakdown happening in here on both of these. And it shouldn't be new if you've been following the channel. And when we were going through the whole May and June and July torture, this is the thing I kept referencing back to, but I wanted to really kind of drive it home on how many times we've seen it. And we even saw it most recently on a smaller time frame when I was really trying to drive in the examples of how it can occur when we were watching Ethereum Classic and when we were watching Doge during this time period down in here. And sure enough, even on those smaller time frames, it played out just like that, and then it reversed. So I stick with it that this structure all says there's a new high to be set in Bitcoin. So this fall right here on the inverse chart means that the price will go up. And we see it happening against gold and silver as well. But is that good enough, right? Here's the big picture of the whole thing, right? Here's the last, 10 years of Bitcoin is simply using this little crashing pattern structure when looking at it inversed and we're looking at it measured versus gold and silver, good enough to say Bitcoin's going to go on and set new all-time highs. We have to look at the big, huge picture of everything, right? And say, does it seem logical that there's new highs that could be set? Well, the one thing we keep referencing back to, and if you follow this channel, I heavily rely on Fibonacci retracements and Fibonacci extensions. And the reality is we haven't reached out to a full Fibonacci extension here for Bitcoin. which does take it up to about $72,000 to $73,000. So it'd be weird to me to see us get all the way out here to play this thing out so beautifully with a crash, retrace, reaccumulation, breakout into all-time highs, and then not go on and get a full extension. That would be weird to me. So I still hold on to the belief that there is still the reach out to the final extension here for the Fibonacci's. But can we add even more to that? And that's where we're going to zoom back even further, and we'll take a look back here at what happened with Bitcoin during the last major bull run that happened in 2012 and 2013 and measure these things out right here. And we can see some incredible similarities that happened with Bitcoin here and in here. Really, we see how this top came in here for Bitcoin, and we see how this bottom came in here for Bitcoin. Look at the corrections that took place in here, and then the similar structures of what happened here. We're just talking about a crash, retrace, reaccumulation, breakout. Look what we have here. We have crash, retrace, reaccumulation, breakout. And if we look at where these reaccumulations came back in at, right in here, we could see, boom, back to the same levels. And when we look at where it fell down to, boom, back into these same levels. So this whole thing has mirrored in here. And I know a lot of people reference to our current time period as if we're sitting in something like that right now, which I don't believe we are. I'm not that optimistic on Bitcoin. I think that this is far more likely right in here, and that we're working on what's going on up in here. But it doesn't take a rocket scientist to just use your eyes to look at that and use your eyes to look at that and say, that doesn't look good, right? So, right. The thing is, this clearly took a lot longer to play out than this did, right? Over here, from us to get from the top to break out again, that took 216 days. In our current market cycle, it took us a total of 1,054 days. It took us nearly 5 times longer to play this out than this out. But there was something interesting that happened in this run up for Bitcoin back in here. We'll take a closer look at it right in here. But there happened to be a 50% crash that showed up in Bitcoin at one point, in which the price of Bitcoin crashed from 50, if it was equivalent pricing, it would be like a fall from 52,000 all the way down to 26,000. It was a 50% crash. And we actually talked about this happening way before this 50% crash showed up. And as I was selling my Bitcoin between $45,000 and $58,000, that's what I was looking for to show up. I was thinking it was going to show up quickly. We were going to get it just like that. Sure enough, it did not. It stayed up here for a long time and then eventually provided a 50% crash. So seeing a 50% fall here is not unusual from what we saw back in here. So this whole structure in here has mirrored what this whole structure has been in here. And there was a 50% crash that happened in this breakout, in this bull run that happened, that still led on to one final top coming in. And we can see the equivalent top up in here is still in those $70,000 areas. That was a weird sentence, in the 70,000s. Another interesting thing we can look at over here is a chart called BLX, the Brave New Coin Liquid Index. And this actually tracks Bitcoin from way back in 2010, back when Bitcoin was just pennies. The thing about this chart is it only updates once every day, so it's not very reliable when you're like trying to look at things of what's happening today. Pretty much just updates the candle every day. So when I'm really wanting to look at the super big picture, and if I really want to go back to way before 2011, I'll take a peek at this. But it shows us something interesting happening over here, and you can see I drew this out over here, a liquid wicks from 0.06 to 0.01. We could see these wicks that happened in here. But we're going to show what happened in these candle closes of what happened with the price rising all the way up in here. And we'll show how this was an equivalent move right in here. But we're going to remove these liquid wicks because this wick right here takes us from 6 cents all the way down to 1 cent, right? This thing took us down to nothing. So we're going to ignore that wick and we'll just start with that candle close that happened right over here. And we'll see how high this took us out. And we can see that this bull run right in here was equivalent length of the entire bull run that happened in 2012 and 2013. These were of the exact same length. That's interesting, right? We have a bull run that matches up of equivalent length right here and equivalent length right here, two mirrored sized bull runs. But what were we just looking at over here, right? We were looking at this bull run compared to this bull run. But we know that this bull run was of equal length of this one right in here. So what happens if we take this exact bull run we're just sitting here talking about, right? We're seeing that same thing, right? We're seeing that the price still reaches out higher. We see the corrections that came in here and all of this consolidation and then the big breakout. But this is of equal length of this down in here, which is also of equal length of this one down in here. So to assume the bull market is going to go significantly higher than what it's already gone would be assuming that this bull run and this bull run are going to be outperformed by Bitcoin in this bull run. And it also, so like one of the things that people like to do, and I understand that, and it hasn't been proven right or wrong, right? So this is just my theory, is that people claim that the 2017 bull run was a full cycle on its own. And as you can see by the argument that I'm trying to present here, I'm stating that it is not a bull run of its own. It is actually just a super long bull run, and it's been going on since 2015. And all the consolidation that we saw happen for Bitcoin was just a pausing point for it to continue going even higher. And that it's not like we're starting over right in here and like we're starting here and heading our way up to, hundreds of thousands or $1 million or anything like that, but that we're just way down in here and that there's still just a little reach out remaining for it. So when we combine together all of these things, that we have this crashing structure occurring here on the inverse chart, and when we see it versus gold and versus silver, that this typically indicates that there is another leg to go, along with the fact that when we measure these previous bull runs and how far they've gone, that Bitcoin has not reached out as far. In addition, from a Fibonacci perspective, which Bitcoin does have a tendency to respond very well to Fibonacci's, it has not reached out to a full Fibonacci extension, which also just happens to align with what we're looking at over here as well. So take into account that we haven't reached the fibs, we haven't gone as far as previous bull markets have happened twice, and we have been mirroring what these bull runs look like very well the whole way up and corrective wise on the way up. It all indicates to me there is still higher to go. But if you notice from all of these things, none of them say $100,000 Bitcoin, none of them say $300,000. And what they all say is if this continues to follow what it's always done, and we don't know if it will or if it won't, but what it says is that Bitcoin gets out there to that mid $70,000 price level, and then afterwards Bitcoin crashes all the way back down to $13,000, $14,000, $15,000 afterwards. That's not me saying this is what's going to happen. That's just what has happened in each of the previous circumstances. So if it does follow along with all this, and if it does go up to the mid $70,000 and continues to follow along, the next step after that, for it to continue following along, is to crash down to $13,000, $14,000, $15,000. But the thing that we know about that is we can see how long these things take to play out. And if Bitcoin is going slower and slower and slower, and these crashes are taking longer and longer and longer, it would take several years for that to end up happening and for that price to get all the way down there. It either takes a black swan, it takes the complete stock market crashing massively all at once, or it takes something like Satoshi Nakamoto starts spending all of his coins or something all of a sudden outside of a black swan event, which you can live your life worrying about black swans or not worrying about black swans. They're always there. There's always a risk of one showing up, but otherwise it would be safe to assume that if things continued, it would take years for something like that to play out, and it wouldn't look more something like that, but more something like that. But I hope showing you a lot of these things on this video helped kind of drive home why I still believe there's a new high to be set in Bitcoin and why my expectation is in that $72,000, $73,000, $74,000. I'm not trying to pull numbers, out of my backside, right? I'm trying to measure moves and figure out what have we done before and what's realistic. And Fibonacci's line up for it. Previous bull cycles measure up for it. That mid 70s area is the most historically relevant area. And while with our crashing structure, the retraces that we've done here on the inverse price chart, it all still signals there's that one more push to go. And that when we look at what these crashing structures look like, and when that final little push does come, you can see it's not too much further beyond where that wave 5 is. It's just kind of right beyond it. And in which if something like that happened here and we just got that right beyond it area, right, where are you at, right? You're here in the 70s and 80s. So that's kind of my logic and thinking to all of it. But there you go, guys. That's my take on Bitcoin, and that's why I have the thoughts that I do. And I try to measure them out and show you exactly what's going on in regards to the crashing structures and why I follow those things and how we've seen them happen before. There was lots of other examples of it that I didn't show you. It's happened in the Dow Jones. It's happened in Bitcoin back at the end of the 2015 and 16 bear market when the final capitulation came in. It was the exact same crashing structure. We see it all the time, but I thought I'd give you some relevant time periods of where I've referenced to it before. And it's not something I'm making up as I go. It's something I've historically used. And then I wanted to show you those Fibonacci extensions in the previous Bitcoin bull runs to build the case on why I think a new high is still going to be set over there for Bitcoin. And in the end, that translates more positively for altcoins. So that's why most of my focus is actually on the altcoin market and not on Bitcoin. But that's for another video. This one was designated for Bitcoin. I hope that you enjoyed it. If you're looking for something to do, you can check out my website over here. This is bcbacker.com. This is a course that I put together where I deep dive into the previous Bitcoin bull runs and the different altcoin market cycles, tying them all together, very similar to what you saw here in this video today. I talk about my personal exit plans in here, and I teach you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro so you can do your own charting and set up your own charts. I talk a lot about mathematics and percentages in here and why those are so important to me. And I do have a market update that I included here on September 30th, so just a few days ago. That's available to anybody enrolled in the course and anybody who newly enrolls in the course. And you can check out all of this educational content over here on bcbacker.com. You can follow me over here on Twitter at bcbacker. And I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.